10 minutes after 8, thanks for being with us here on Morning Live. Now, Mark Barnes, investment banker and former South African Post Office chief executive, has cautioned that converting Eskom's debt into equity is a huge decision that requires insight into the entity's performance. Now, this comes after Reuel Khoza, the Public Investment Corporation's board chairperson, said last week that the PIC and its main client, the Government Employees Pension Fund, has submitted a proposal that could help Eskom to get out of debt. Now, Barnes cautions that the investor would need to understand the future earnings and also the growth prospects of the company, where the plans are put with regard to capital. And Barnes also raises some of the realities that might play out in this process, including potential change of ownership if the value of Eskom doesn't exceed that of the shares after conversion, and the state will not be able to retain control of the entity. Now, Mark Barnes joins us now to tell us more about this, and he is coming to us via Zoom. Mark, thanks for speaking to us this morning. Welcome.
Thank you. Thanks for your interest.
So perhaps just in a nutshell and in layman's terms, if we can just get everybody to understand exactly what we are talking about here with regard to Eskom.
Okay, sure. I'll try. First of all, you've got to understand that a pension fund manager's prime purpose is to make sure he can pay the pensioners and the other employee benefits when they fall due. In order to do that, he takes their contributions and he has to invest in assets which have got a running yield, which pay regular interest or dividends, okay, so that they can use that cash flow to meet their liability obligations. The primary focus of the pension fund asset manager is to ensure that you can meet and match your liability structures, which don't involve speculative or illiquid investments in capital. That's the first point. So the focus is on meeting your obligations. Now, the GEPF, the Government Employees Pension Fund, are sitting today with Eskom bonds. Eskom bonds pay a regular coupon of interest every 6 months, and so they can plan for that money to arrive, and it's safe. It's pretty much government guaranteed, an Eskom bond, pretty much. And so they want to take that capital now, 90 billion or so of it, and swap that into a share in Eskom. Okay, well, what is that? Well, first of all, it's an illiquid. They won't be able to trade it. It's a minority share. It's very unlikely you're going to get some dividends out of the Eskom company in the foreseeable future. Raises all sorts of peculiar things about the fact that this is a wholly owned subsidiary of government. Okay, and so now you've got a, if you like, friendly pool of capital that is being allowed or invited in or being agreed to buy shares in Eskom, which in my view, I can't find why it's in their interest given what they're swapping it for. So I'm saying there are two decisions. If you were just sitting with money as a pension fund manager, pension fund assets, would you go and buy Eskom shares? Of course you wouldn't. They haven't got any yield and they haven't got a market price and you won't be able to trade them. So you wouldn't do that. Okay, so now if you double up the fact that you're sitting with a healthy yielding asset, which is an Eskom bond, why would you do the swap?
But everybody seems to be on board here, Mark. Eskom, COSATU, government. So raising this red flag, what does this actually mean for the government employees, pension fund holders, you know, the actual people whose pensions are potentially going to be used here?
Yeah, well, you see, you know, there's a... When you're looking for capital, as Eskom surely is, and listen, let me get straight. We need to recapitalize Eskom. We need to look at its capital account. But what Eskom should be doing is looking for smart money that understands their business, okay? Because those people, internationally and locally, that invest in projects like Eskom, which is a utility, which is a highly necessary functional utility at the center of the economy, they give long-term capital to these kinds of projects based on the forecast cash flows that are attributable to those projects, which in the case of Eskom, before we had municipalities not paying and things like that, or any corruption, are very predictable economic models. So they can raise capital in the capital markets of the world, and that's how they should raise money. And more importantly, when you raise money from people who know what you're doing, okay, exactly, who are in that business. They bring a discipline and an oversight and an understanding of your business, and you become partners with the people that give you the money. The pensioners, as you asked, ultimately the pensioners in GEPF are so far removed from an understanding of the economics of Eskom, as all of us are right now, that I think it's inappropriate. They cannot evaluate this decision. Now, that's why they appoint professionals. And the professionals, in my view, would make an unwise, if not indefensible, decision to swap a regular, predictable, guaranteed income stream for a minority share that's never going to pay out.
Now, you also raise a rather poignant point about a potential loss of state control and the change of ownership and the governance after the conversion. So talk to us about that and what your concerns are here.
Okay, so as we have it today, SOEs are wholly owned by the government. There's one shareholder. The shareholder makes the rules. That's cool. If you start allowing other shareholders in who have got independent minds, you now have a situation where the government doesn't own 100% and can't do what they like. And they must therefore invite those shareholders to have a say on the appointment of the board, on the approval of the plan, on all of those kinds of things. And by the way, if they're going to invite a shareholder in, they must invite anybody in. Why can't, another asset manager go and buy Eskom shares at the same price? Because that's the way you'll determine the fair market value, okay? And so these extraordinary special terms that are applicable to what I might describe as frenzy capital in an entity which is owned by all of us, the people, okay, and which is critical and central to the functioning of the South African economy. So, and this is not privatization, okay, and this is not prescribed assets, not to confuse those things. This is just a rescue capital mechanism, and I think we should face whatever the facts are in long-term, enduring financial solution, because can you just imagine that if Eskom was worth less than the 90 billion they put in? So let me explain that. So if Eskom's only worth 90 billion and you put in 90 billion, then you get 50% of the gain, okay? If Eskom is worth nothing, and there's an argument that they could be worth nothing, the value of the shares as we sit today with all their debt and other problems, then the GEPF owns Eskom after this deal. Well, government can't do that. They can't sell Eskom to a pension fund.
And of course, as we just wrap this up, you raise one of the other issues here, Mark, as potential conflict of interest. One could read it as where you talk about the current principal executive of the Government Employees Pension Fund moving to the PIC. So why should we be concerned about that?
Yeah, I'm not particularly. I think that might just be a coincidence. I've got a high regard both for the chairman of the PIC and for the principal officer, both of whom I've met, and they're very stand-up, very competent people, both of them. I don't think this is about them.
So you don't think that has anything to do with the sort of decision-making that is currently going on?
Well, I would be surprised. I think this is more of a broader plan, which says we need equity in Eskom. Okay, because we've got, and if you combine the impact of COVID and all of these kinds of things, the government just suddenly had a 500 billion, 800 billion plus, strain on its already strained balance sheet. So we might just need to cope and do quick things. But then I think, we need to source another form of bridging funding or another, equity player. I believe that the state has a significant role to play in the economy, and it should play that role. But it should play it in partnership with smart capital, with smart external capital, to bring to bear the objectivity and the drivers that the owners of that discretionary capital who have a choice, and that's my issue. You need to go to people who have a choice. And if they come in, they're going to say, okay, this is how we're going to play. And that creative tension between the suppliers of money and the people responsible for managing that money creates effective, competitive organizations.
Final question, Mark. When you left the post office, you were reported to have availed yourself to lead Eskom. What approach would you have taken in this regard?
Listen, I think the Director's doing a great job. from what I can tell. It's very difficult to say what I would have done if, and I didn't get offered the job, but what I would have done is really gone back to the basics of a critical utilities function and its economic model. Now, the cost of electricity is a known commodity and a producible commodity. The utilization of electricity, the unit cost, all of those kinds of things produce a very predictable economic model if people pay. Okay, and if you have such a model, you can finance that institution independently, and you can get the top managers in the world to come and look after it. So I would have looked at it completely on the numbers. I think if you want to rescue an organization in trouble, the first place to go to is the objectively determined raw truth of the future, and then build from there.
Well, Mark Barnes, thanks for your time. Investment banker and former South African Post Office Chief Executive, explaining to us why it would be necessary for the parties involved to be cautious before converting Eskom's debt into equity because of the huge implications involved in such a decision. With that, let's take a quick break.